Everything is happening through these screens.
How are we getting the most out of that person?
I want to see this thing grow long term.
Amazing story. You have such a unique perspective on that.
Schedule a 2-week vacation.
I applaud those models.
Undervalue.
Secure your digital footprint as well.
Why were they even put in place in the first place?
Only the most adaptable survive. Let's get to the leaders list. Hey, stop me if you've heard this one before. Sales can't stand marketing because they don't generate leads and interest. Marketing can't stand sales because they'll take any piece of business if it'll fog a mirror. And the CEO finally gets frustrated and says, fine, I'll fund a new agency for the marketing team. We'll get some sales training in here. Everything should be perfect, right? I'll see you in 6 months. In this environment and in this new normal, you really can't view sales and marketing anymore as a single individual function. It's a company-wide perspective. That's why we've got Greg Stanley from Accelerant Consultants to talk to us on the leaders list today about how to view sales and marketing from a holistic perspective and truly find something that will get your company PE ready and increase your business at the same time. I'm Bryon Morrison. Let's get to the leaders list. All right, Greg, welcome to the leaders list.
Bryon, thank you so much. I'm really happy to be here. You're doing some great things for those in the small and medium business space, and hopefully I can supplement that a bit.
No, it's going to be great. I know you're going to bring that Terre Haute magic, but one of the, you've got such a great background, and I know you started out in hypergrowth. You've been, Fortune 500 large scale consulting. You taught at Butler University. So I know you serve on boards, and so I think it's probably best, let's just start with a little bit about your background and then what you're doing with Accelerant today. I mean, it's a fantastic story.
Yeah, so just a brief background. I started my career, as we've discussed, in a hypergrowth environment. We were $1 million in top line revenue, and I was the 10th employee. We had 9 employees when I started. I was the 10th. Grew from $1 million in revenue to $500 million over a 10-year period of time. And by my late 20s, I had about $175 million P&L responsibility for a piece of the organization that I helped build and grow. And so not sure I would have, in hindsight, put myself in that kind of position with that kind of responsibility, but I was there and had to figure it out.
It's super common for a 20-something to be managing something at that scale, right?
So that was the beginning of my career. We got acquired by a publicly traded company, and I knew culturally it probably wasn't going to be a great long-term fit. So I wanted to get back into the high-growth middle market space, which wouldn't necessarily intuitively lead one to a Big Four accounting firm, but PwC at the time was building and growing from the ground up a technology security organization that didn't exist at that time. And so I was given responsibility for the central third of the U.S., and given a lot of latitude to grow the business based on new client relationships, based on formation of the team, how we spend our marketing money, doing project QA, all the things that you have to do effectively running a startup for that piece of the world. And that grew to about an $85 million contribution to the firm over about a 5-year period of time. They then approached me and said, we would like you to consider taking on Ohio, Kentucky, and Indiana. It was a newly formed geography that they were pulling together, and they needed somebody to sit on a 6 or 7 partner panel to run that geography. So I was responsible for that part of PwC's world in building and executing against a go-to-market strategy, building a marketing team, building an inside sales team, building an outside sales team, doing client segmentation, coaching a lot of people that had very deep technical skills and capabilities on an approach to clients and how to develop revenue and do it in a way that was strategic. Did that for several years and ultimately wanted to get back into something more entrepreneurial. And so about 8 years ago, a little over 8 years ago, I founded Accelerant Consultants with a specific mission of helping small and middle market business owners optimize their revenue functions in a way that maximizes organizational value and gives them more and more meaningful options to exit. So the gap that I found in the market was that there were a lot of organizations claiming to help with growth, but very few focused on building value and transferability of the assets of the business owners. And it's nice that business owners can take a nice salary or distribution from their businesses on an annual basis, but they're effectively buying themselves a job, and they often do it at the expense of building a transferable asset. They ultimately want to exit at some point. They have to exit at some point. We all know that death is undefeated, and business owners, as a result, will have to be forced to exit at some point. So instead of looking to the future, and as Stephen Covey said, beginning with the end in mind, and how do I want to exit this in a way that maximizes the value of the organization, they're taking hundreds of thousands of dollars today and foregoing millions later when they decide to exit. And I thought it was tragic, the number of business owners that ultimately invested their lives, their blood, sweat, and tears literally into building businesses, and at the end of the day had built something that nobody wanted to buy and had to put a chain on the door and ultimately release all of their employees who ultimately were many times treated like family members from their business. So I thought if I could play a small part in keeping that from happening and helping business owners exit in the right way, helping them, their families, their communities, their employees, seemed to have a high level of intrinsic value, and that was really my motivation to start the firm.
Love it, Greg. I mean, you've got such a servant mindset, and that comes through, easily as you go through this. The learnings that you gain from being in that hypergrowth startup and then going to PwC and building that out as a new service offering in a new geography. How did you scale that back? I'm kind of curious about, like, when you've got that kind of exposure to a massive big corporation, you get great learnings, great frameworks, you learn tons of great stuff. But you specialize in working with mid-market, small market. So how'd you make that relevant to that group?
Well, as I mentioned, I had spent the first 10 years of my career in an organization that was small but hyper growth, certainly resource constrained, certainly talent constrained, certainly investment constrained, all the things that small business owners face. And then I took the learning and experience from that and then was able to incorporate a lot of what you find at bigger firms, a PwC, for example, where you see best practices around strategy, around processes, around repeatability, around scalability, all the things that they ultimately have become very good at over time. And it's the reason they're a $50 or $60 billion multinational organization now. And so it was really the combination of those two that I think gave me a unique perspective and a unique ability to deliver in this small business space.
Yeah. So you did have the classic constraints of a small to medium-sized business in the first organization. So that's a great perspective. But I love one of the favorite things that you do, in my mind, is you view revenue from a strategic macroeconomic perspective. And that's got to be fed, largely by being able to see it from the exposure of a big Fortune 500 also. So talk to me a little bit about what you see happening right now for leaders in small to medium-sized businesses from that macroeconomic perspective.
Yeah, we're in a very interesting time, as you know, Bryon. We went through a period of time where we had a really healthy economy for about 10 years. And then COVID hit, and it created a 6 or 8 month blip for a lot of organizations. But then massive amounts of federal funding started to flow into virtually every business. And for a period of time, even with the supply chain constraints and the labor issues and all the things that COVID came with, it was almost hard for business owners not to make money. And so a lot of people said, I've got this revenue thing figured out. I'm making a lot of money, more money than I've ever made, in fact. But a lot of it was sort of the artificial inflation of revenues based on the federal funding flowing, combined with almost free money from a borrowing perspective. The interest rates were close to zero. We then fast forward out of COVID, and the federal spigot has now turned off. And a lot of the tailwinds we had in the times where we had a great economy, the low interest rates and absence of things like tariffs that are now causing significant challenges for small business owners, those are now creating some economic headwinds that we haven't seen in the last 15 years. It was really pre the 0809 economic challenges that we had nationally. And so now combined with, you combine the fact that the federal funding is no longer flowing with the fact that we've got tariffs and other headwinds, possibly inflation, labor challenges, other things that are affecting small and medium businesses. The vast majority of business owners I'm talking to and working with are saying, okay, we've been whipsawed a bit. I don't even know what normal looks like. I'm down to 2018 or 2019 numbers, and I'm seeing growth stagnating, and I'm not sure what to do about it. And that's really from a macroeconomic, I think a lot of what the vast majority of those in the small and medium business space are seeing today.
Yeah, I agree. I see the exact same thing. So if the subject is constraint coming from all sides, I also know you recognize the fact that the PE space is moving into nearly every industry, and so along with that, there's a raised level of competition because they're well funded, they know what they're doing, they're prepared. So a lot of the things that we used to be able to do to get by, and like you said, we were in a a bull market, so there was plenty of opportunity. Now, as we're starting to struggle, that sales engine becomes absolutely vital. So when you start working with a company in developing that sales engine, what are the things that they have to consider in the very early stages that might be a little different than what some other folks might talk about from a marketing perspective? Or like if you get an agency to come in, they're going to give you a very different perspective. If you have a sales trainer come in, it's a very different perspective. How would you approach that sales engine?
Yeah, so you brought up a couple of topics that I'll try to address. Number one is the insertion of private equity in the small and medium business space. 10 to 15 years ago, that was not an issue. And what has happened is because there is about $2.5 trillion worth of dry powder sitting in funds waiting to be deployed, private equity, they ran out of targets effectively in that $100 million revenue plus space that they had traditionally played in. They also knew that if they moved down market, a lot of times the multiples were lower and there was greater growth opportunity because of the lack of structure and intentionality that small and mid-sized business owners tended to operate their businesses with generally. From a business owner perspective, a lot of business owners are saying, hey, this is great. Private equity is moving into my space. They've never been here. I've got people with deep pockets and fat checkbooks ready to write me a check and buy my businesses because I'm getting 2 and 3 calls a week, which is not uncommon regardless of the industry that they're in. What I think many fail to recognize is, to your point, they are remodeling the competitive landscape. And when you look at where private equity is today versus where they were 15 years ago, they are significantly invested in things like professional services. 11 of the top 30 accounting firms now have private equity investment. You would never 15 years ago see private equity in industries like HVAC and plumbing and electrical, and they are now pervasive in those spaces. When you look at the top 5 industries that private equity invested in 10 to 15 years ago, those are vastly different than what they are today. What business owners fail to recognize is because that competitive landscape has changed, they are no longer competing with other business owners that run sort of middling types of businesses, don't have funding, don't have necessarily operational excellence embedded, don't have a strategic bent, aren't looking at exiting. And ultimately, they are now playing against major league teams as opposed to the single A teams they had been playing with historically. So while it creates a potential opportunity for business owners, it also creates a significant risk. I think the challenge and this is really the second part of what you got into, the challenge that business owners are often seeing now is that.
Hold on one second, Greg. I want to underscore that. Because a lot of people right now, you look at PE coming in and you think to yourself, that's a great benefit. I think that's so important to underscore that, what you just brought up, that it's requiring you to work at a different level. So a lot of times when people start getting interested in exiting, or even on the other side, on the buy side, if they start being acquisitive in any way and they start thinking about M&A as a tool for growth, they're going to clean things up. They're going to get better. They become more professional.
Mhm.
So this mindset is really being forced on them, whether you want to do it or not. Whether you are thinking about a liquidity event or not, you have to do this to be able to compete at the same level. I just think that's such an important point for every listener to pay attention to.
Yeah,
So
well,
I'm
and
glad you brought that up. But then, yeah, now we were going to talk about the sales engine. So how do you do that more effectively, and how do you get in front of that problem?
yeah. Well, and you made the Terre Haute, Indiana reference, and being from Terre Haute, we tend to subscribe to a lot of higher level thinking philosophers, people like Bill Murray, for example, in Caddyshack, who once
Exactly.
said, "My foe is an animal, and in order to catch an animal, I've got to think like an animal. I've got to act like an animal." And the same holds true for small business owners thinking and acting like private equity. They have to start running their businesses in a very professionalized, scalable, efficient, effective way, and not just do kind of the ongoing land grab for top line revenue. So in terms of what business owners now tend to go to or have historically, they see an issue with revenue stagnation. And the easy thing to do is hit the easy button. And the easy button is to very tactically address it. I need to either hire a marketing firm to do a big campaign, and they'll get me more leads because my sales team is saying they need more leads. And as long as they get more leads, we're going to grow. Or you get a sales coach who's saying all you need to do is sales training. This is a training issue. And as long as you address the sales training, this is going to fix itself. The issue is it's really up to the business owner to create the environment for people, including the business, to thrive within. And I've mentioned to you in the past, I tend to use a houseplant analogy where it's up to me when I buy a houseplant to put it in the right environment, give it the right temperature, right amount of sunlight, the right amount of water. If I don't create the right environment and that houseplant fails, that's a me issue, not a houseplant issue. More times than not, however, I will give it too much or too little water, or too much or too little sunlight or heat or cold or whatever, and it dies. And so it's really about having a strategic approach to creating the right environment and looking holistically at the revenue function as opposed to going to point solutions. The point solutions may work for a short period of time, but in terms of ongoing organizational value and sustainability, they tend not to be the answer. And those things may need to be executed from a tactical perspective at some point, but they have to be aligned to the strategy. The strategy has got to come first.
Yeah, that really hits home. I've killed a lot of plants. No, that's it's so interesting because that's a holistic perspective, right? Which is often difficult because it's easy to point to something that seems like the problem and go scratch that itch, as opposed to I'm going to get to the root cause. And so if I'm thinking about like what tells me the root cause, and I'm thinking about like, how do I examine this? Because you assume the person in charge of sales is going to do that and they're going to get that. But oftentimes, I don't know if you've seen this, but I've seen that there's a challenge for maybe that salesperson to be able to see the entire environment and see it holistically. And so that's why a CEO is a good partner in this discussion, right?
Right. And for lack of guardrails and organizational structure and strategy and pointing the sales team in the right direction in terms of what does an ideal customer look like? What do I want my customer portfolio 3 years from now to look like in a way that's going to create value for my organization? How do I help the organization move up market? And I do a lot of speaking on compensation. A lot of business owners think as long as I fix the compensation, everything else will take care of itself. Unfortunately, when you operate in that environment, your customer portfolio tends to be comprised of those that give each individual sales team member the path of least resistance to compensation. And it also assumes that your compensation plan is aligned to the creation of organizational value and not just driving top line revenue. So you look at the franchise environment, and I'm a big proponent of putting salespeople in a position where they feel like they own a franchise within the organization, and whether that's a geographic territory or a set of named accounts, whatever that looks like, and then giving them the tools to allow them to structure their part of the world or their part of the organization in a way that maximizes value for the organization. And if the compensation structure is planned correctly, also maximize their own compensation. And so assuming those two things are aligned, you get a whole lot more lift organizationally than just paying salespeople on a pure simplistic percentage of top line revenue.
You know, it's funny because one of my favorite questions when I start to work through an organization and move beyond the CEO, one question I love to ask is, if you had $1 million, would you invest in this company? And that kind of ownership, that's one of those questions that immediately identifies whether or not that individual has a stake in the business mentally,
Mhm.
and they're capable of doing that. So yeah, I couldn't agree with you more about that. So if I'm thinking about this from a CEO perspective, I'm trying to create the right environment. I'm trying to support the entire sales team, and I want to understand the root cause issues. What are some of the metrics or KPIs that I should be paying attention to that kind of give me an indication that there might be something bigger afoot than just the point solution can solve?
It's interesting to me. A lot of business owners and the vast majority that I inquire around, okay, what's your goal for the next year or the next 5 years? It's almost always to grow top line by X percentage, 7% next year or 25% over the next 5 years or whatever those numbers are. Those don't necessarily equate to organizational value creation. So when you think about, from a CEO's seat, structuring an organization that ultimately is accretive to value over time and ultimately builds a transferable asset, I think about it in terms of the development of strategy. Number one, understanding your financial model. What is it that drives net profitability, not just top line revenue? And I've got a lot of clients that will do a financial analysis and will determine that some of their biggest customers are losing them money on every transaction. Doesn't mean necessarily they need to fire the customers, but certainly having a conversation about pricing or creating a more efficient delivery model, those things have to be in play, because you can't have your biggest customers losing you money, which oftentimes is the case. Also looking through the lens of opportunity cost and making sure that you understand that when you are investing in people, products, customers that are driving lower net profitability, those things are detracting from your ability to invest in those things that create a higher level of profitability. And so once you get your mind and your arms around what your financial model is, then you can start to drive organizational alignment around that financial model, allow your organization to start moving up market and or into those areas from a product or customer perspective that are most profitable, and then start to build value over time.
Yeah, Greg, I got to tell you, there's an evolution point in business. When we start working with companies, we can always tell once they tip to understanding profit, not top line,
Mm-hmm.
and they understand that it's a positive to say no at times.
Mm-hmm.
Being selective about the business is so incredibly important, and you can tell that's an evolutionary state. That's when a business has moved to another level. And it's funny because you're right. I see the same thing. Up 7% increase this year. That's one of those classic discussions of 5 whys.
Mm-hmm.
If you just let them get to their description of why they are doing that, and you just keep asking why, it's amazing how quickly that runs out, and it turns into, that's just what we've always done.
Yeah. Yeah. And not only that, there will be no organizational realignment, no realignment in terms of what types of clients or customers we're focused on. It's just running faster on the hamster wheel. We're going to do more of the same to generate more revenue. And some years it works, some years it doesn't. And it's interesting to me, and I'm sure you see this all the time too, where a lot of business owners, they just take all their revenue from all their customers and all their products and or services they sell, they put them in a pot, they stir it up, and at the end of the year, hopefully you get a black number and not a red number. And they're not sure really where it came from. And so without doing a deeper dive in terms of the financial analysis, which they're capable in the vast majority of cases of doing on their own, and then getting really intentional about that which drives a higher level of net profitability versus a lower level, then it for lack of doing that, it becomes a top line revenue grab. And top line revenue grabs tend to create a lot of chaos, a lot of dilution in the business, a lot of destruction of value in the business, and ultimately create a situation. And there's a period of time when businesses start up, you almost have to do a top line revenue grab just because you need the cash flow. But the longer that goes on, the more likely, in my experience, is the businesses are not to make it long term and not to have a transferable asset.
Yeah. So let's talk a little bit about, as we're talking about that change, right? In the beginning, there's oftentimes, the CEO is the top salesperson, and then you bring in another salesperson, and they were great as a salesperson, not necessarily as a manager. So talk a little bit about how an organization can structure around strategic sales, and what would you put into that?
Yeah, and you mentioned it, and a lot of times founder-led sales are effective because the founder has a deep technical capability, a good business idea, a lot of passion, and a network. And they leverage all of those things to be able to just brute force their way into some level of organizational growth. They are bringing people in, and very often the founder of the organization didn't come from a revenue generating type of functional area. They are scientists, they're engineers, they're accountants, they're whatever they are, but they tended not to come from a sales and marketing environment. So sales and marketing tends to be very much of a black box. And their belief is they just need to hire people that are experienced in sales, send them out in the market, and they're going to bring in more revenue, and it's going to make me as the owner more money, and everything's going to be great. Well, again, without creating that definition and environment and strategy around what good growth looks like, because not all growth is good growth, what a good customer looks like, because we love all customers, but we certainly don't love them all the same. And they build a strategy that accomplishes really three goals. It is, what are my needle moving customers in terms of organizational value creation and net profitability? And how do I maintain those customers? And do it in a way that creates scalability, efficiency, and effectiveness. Where is growth opportunity embedded in my existing customer set? And how do I extract it with the right level of staff alignment? Again, meeting the threshold of scalability, efficiency, and effectiveness. And ultimately, what becomes the lifeblood of any organization is, how do I enable the organization and position the organization with the right customers that have the right needs that are aligned to my delivery capabilities, and create net new revenue and net new clients. And for lack of those strategies, you tend to, again, operate in that whack-a-mole, undisciplined land grab kind of environment. But those strategies are based on the financial model that creates organizational alignment that ultimately will create the guardrails for those you're bringing into sales, that creates repeatability, creates a process, creates the right expectations, creates the right alignment of compensation to that which creates organizational value.
Yeah, so Greg, that's easier when you're talking about new clients, right? And prospect acquisition, and you're going through that process of evaluating the market and saying, I'm not going to spend my time going after these. What do you say to the CEO who has a base of customers that are not as profitable as they should be, but they can't give up that revenue?
Yep.
How do you take them through that process? Because I'm sure that's never happened to you, but how would you do it?
It's interesting you asked that question, because I just talked to a client on Friday that is having exactly that same situation. And the interesting way to approach this is, and I would certainly not advocate for lopping off your bottom tier of customers on day one, but it becomes a find and replace kind of strategy. So however you choose to rank your clients, whether it's a generation of net profitability, upside from a net profitability perspective and from a fees perspective, growth opportunity. Do they treat my people well? Are they culturally consistent? Do they have the needs that align with my delivery capabilities long term? So actually coming up with a matrix that says, okay, I'm going to define what is the minimum I'm willing to take from a client perspective? What does ideal look like? And then what disqualifies an organization from doing business with us and operating from a perspective of abundance as opposed to a perspective of scarcity. And I think until you do that, you're not able to put your organization in a position where you're doing things very intentionally. And so however you decide to stack rank your customers, whether it's gold, platinum, and silver, whether it's ABC, 1, 2, 3, however you decide to do that, making a commitment to say, okay, I can't give up this revenue today, but I'm going to very intentionally target net new customers that fit my ideal profile. And when I get one of those, I'm committed to dropping one of my or three of my bottom C clients or D clients, whatever those look like. And over time, I think what business owners will find is once they take on a strategy like that and start very intentionally making decisions on a daily basis about who they do and don't take on business with, how they price their products or services, how it adds or doesn't to net profitability, they will wake up 3 years from now with a vastly different and more valuable looking customer portfolio than they would doing the land grab for top line revenue.
Yeah, it's so obvious, but man, it's easier said than done, right? I mean, so many people are like, yeah, I will replace it eventually, and then something happens. They go, well, we still like them, we want to take care of them. So what also happens in that process is that if you go have the conversation about the type of work that you are evolving into and how you can make a bigger impact, sometimes the repitch to those companies, they become bigger customers. And so you have to go through that process. It makes a ton of sense. I'm curious, do you have like a gold standard, metric framework for evaluating customers? I know you said it could be any kind of a framework. I love lifetime value. But RFM, recency, frequency, monetary value, it's easy to build grids around that. And but is there something that you use specifically that you think, hey, if you get this right, you're going to be in a much better place?
Bryon, I don't think it's one thing. I think it's a list of attributes that add up to, does this make sense or not? And those attributes are different for every organization. There are some.
Well, I love your point about values. Like that is something that is not brought up enough, but if an organization does not have shared values, you will feel that. There's natural conflict between the services you provide and what they care about. So that's a great example. And frankly, I could easily see somebody saying that's my first pass.
Yeah, exactly. Well, and what happens ultimately is if you get an organization where you don't share the values and they don't treat your people well, that is the foundation upon which you build culture. And your best performers will say, this is tolerated by the leadership of our organization. They know I'm not being treated well. They know this customer doesn't make us a lot of money. They know that culturally it's not a good fit, but they feel beholden to this revenue that they produce. Instead of, it's like an employee that's a high performing employee that is either culturally inconsistent with the organization or gets sideways in terms of the values of the organization. Not firing that employee says a whole lot more about you and where you stand from a moral and cultural foundational perspective than firing that person. And you start to lose your best employees and your most highly contributing employees because you're not doing things that protect your culture and protect your employees.
And that happens so often in sales too, right? Because I mean, you can look at some superstar and go, man, that's, they're just doing so much good work. I'll overlook the bad. And it tends to be, there's a lot of personalities in it. And so it's easy to find that at times, but I think that's a great gut check for everybody. Everybody go reread 5 Dysfunctions, from Lencioni again.
Yeah. And I was going to say, to maybe more completely answer your last question around the attributes that make up an ideal client, but lifetime value is certainly a great one. There are organizations that are geographically constrained. I can only really operate and deliver at a high level and have credibility in this 3-state geography or within 90 miles of where I am. There are people that operate globally. They don't care where a customer is. There are organizations that have to fit into a specific industry. There are organizations that are industry agnostic. So when you look at those attributes and you build those in a way that's customized to that specific organization, you then effectively create not just one attribute, but a matrix of attributes to say they either fit this or they don't, and they are either disqualified or minimally qualified or are ideal. We're only going after the ideal. Longer term, if you're not minimally qualified, we're going to find a way to either get you to ideal or work you out of the system because you are creating an opportunity cost for the organization.
So, classic mindset around market sizing and identifying the size of the prize, look at total addressable market, all the way down to service obtainable and who your current ICP is and all that stuff. When you go through that process with somebody, what do you do with an organization who's moving into a new market and what they did in this market doesn't work in this market? And so they just go, we're going to unleash the hounds. We're just going to go get anybody we can. Like, that's a pressure situation where the organization is trying to do what they know, but they're open, they're willing to change, but that's out of desperation and fear and scarcity, like you were talking about. But there's a reality, right? There are those PE firms that are already going and hitting those markets, and they're doing it with precision. So how do you help an organization like that? Or do you have any examples where you've taken somebody through that?
Yeah, it's really, in my opinion, kind of a three-step process. It is, do I have the capability to deliver, and who can I deliver to in a way that would appreciate the value of what we're delivering? From a product or service perspective, it really doesn't matter. Is there a market available for this? The second piece is, what does the competitive landscape look like today? Is it already saturated? Is it saturated with big names? Are we even able to compete? How do we compete? And then the third piece is, what is our value proposition that ultimately helps us become differentiating and compelling? How do I go to market in a way that I'm not talking about my company and my headquarters and how many people I have and how many years I've been in business and things that people don't care about? It's how do I go to market in a way that's focused on the business problem that I'm solving through whatever product or service that I have, and how am I solving this in a different and better way than what exists in the competitive landscape today?
Yeah, that's a classic marketing and sales, right? I mean, so many organizations, they go, yeah, I'm in charge of sales and marketing. And so the next question is, which is it?
Yeah.
So you really do have to have that holistic mindset. I love that.
Yeah.
So, Greg, I could obviously go on for 4 days on this because it's super compelling and it's interesting to me because sales is always important, but I do think it's timely. I think your point about the fact that the world is changing and those macroeconomic factors are real. And then we didn't even talk about the influence of AI as that's starting to impact business. I mean, it is not going to get easier, and companies are going to have to recommit, get focused, and get smart about this. So I love everything you've said. I know you, and I know your capabilities, and I would say to anybody who's thinking about how do I build a consistent and repeatable engine, should absolutely reach out to you, and we'll have all of your information in the show notes. But the show's called The Leaders List because we think about what should be on the leaders list. So if I'm talking about founders who, were running businesses from anywhere from, like a 25 employee to 250 employee, or as long as, under 500. So we're still growing, scaling. It's different than, the Fortune 2000 plus. In that environment, I just got done watching this. What are the things that I should put on my leaders list immediately? What's the first takeaways I should think about, Greg?
Well, I think the first takeaway is certainly understand your financial model and understand it at a level of depth where you understand where top line revenue either translates or doesn't into net profitability and ultimately EBITDA, which is largely the measure of value when you go to transition your business. So
that's an important point. That's an important point. That's also where the CEO steps in, right? The sales, the head of sales may not be thinking about that. And that's not to, put any sales leaders down, because there's a lot of them that are really, really smart about that. But that's a cooperative role with the CEO to understand true EBITDA or the COO and help them look at that from a balanced perspective. So I love that. That's a great piece.
Yeah, 100%. So, and when I talk about understanding your financial model, I'm talking about if you've got the financial wherewithal to do it. If you don't, at least do a back of the napkin and understand directionally where you sit in terms of development of a P&L around your products and or services, with allocated cost, around some sampling of your customer set to understand where you're making and or not net profitability. and your sales team. A lot of organizations look at their company and they say, okay, I'm going to invest in marketing, or I've got a marketing problem, or I've got a sales training problem, or I've got other things that I need to address. A lot of organizations, if you've got 10 salespeople, you could have $1.5 million to $2.5 million wrapped up in fully loaded compensation. If you don't get that piece right, there is a massive opportunity to create a great ROI on that quote unquote asset of the organization, and or lose a ton of money because they are operating dysfunctionally or certainly not optimized. So that's the first piece, is make sure you understand your financial model and what drives value for your organization. Number two is build a strategy, as I mentioned, to identify those needle moving net profitable customers. And how are you going to maintain them? I try to get my clients to get their minds wrapped around and institute what I call a minimum standard of care. If you got a team and or within your organization, what is it that you're doing that over the course of a year creates value added communication, value added connections with your clients in a way that says dealing with your organization is different or feels different than operating with others who are waiting to get my phone call and take my order? That's low value. And so what does that minimum standard of care look like? So the strategy to maintain, the strategy to identify and cultivate growth opportunities, and ultimately the strategy to by attribute, and then boiling down to company name, target, cultivate, and ultimately convert net new customers. If you're losing more customers out of the back door than you're able to gain in the front door, it is a death spiral that you will not be able to get out of. Your boat is taking on water faster than you can bail, and you ultimately your ship will sink. So development of those free strategies, and then ensure you align resources against the strategy, again, against the concepts of scalability, efficiency, and effectiveness. You've defined high performance, and you're holding not only your people, but yourself accountable against that expectation of high performance. Coaching around it, onboarding, training, management accountability, those all have a role in making sure that that culture is high performance and that people associated with it are performing at that level. And what I will tell you is there are a lot of business owners that are a bit reticent to hold people accountable or define or enforce high performance. High performers want to be in a high performance environment. That creating that environment and tracking people and giving people goals and metrics and aligning compensation and aligning expectations and KPIs, people that are at the high performance level, they want to be held accountable to do those things, and they want to be surrounded by other high performers.
You know, what I love about everything you just said, Greg, is while the head of sales might drive and lead and own that process, you talked about, like, you know, that's a CFO initiative to help understand the true economic, model for the organization and what works. It's if you're losing customers in the back end, then that's an account management perspective. A lot of times that moves from sales to account management. So that's something that is holistic, certainly impacts the revenue of the organization, but it's not just the sales leader's initiative. And then when you start talking about compensation, that's HR and the comp committee. And so, that's the important thing about this. And I would imagine that's why people call you, right? I mean, because it's something that lives in the gaps. When you're talking about holistic strategic revenue, it lives in the gray areas between functional leadership.
Yeah, and you're right. It is a holistic enterprise type of lift that needs to happen. But again, you're building a platform. You are platforming the organization for value creation. Everybody in the organization is in some form responsible for making sure that that not only gets built, but gets rolled out and maintains consistency over time. To your point, HR, there are cultural transformation elements around HR. If you're going to change compensation, or you're going to change expectations, or you're going to change onboarding, a number of the different leaders in the executive suite need to be involved. This is not just a sales leader and or a CEO type of initiative. This is finance, this is operations, this is HR, this is sales leadership, this is marketing leadership. It has to be a holistic pull because you are executing against a value creating or value based strategy that affects everybody.
Yeah. fantastic, Greg. Thanks so much for giving all of this insight. I hope everybody leaves this with an understanding of where they should start building their leaders list around strategic revenue, and hopefully they'll give you a call in the process.
Well,
Thanks
Bryon,
again for being on the leaders list.
yeah, the time has flown, Bryon. I really enjoy all of our conversations, and this one certainly, hopefully, has benefit for your leaders list, and hopefully provides some incremental value that maybe has a unique perspective that they haven't heard before.
That's great. I'm sure it will. All right. Thanks again, Greg.
Thanks, Bryon.